one of the best cashback credit cards in America, just vanished overnight. And millions of people are now wondering if they're about to lose one of the easiest money-making credit card setups ever created. A few days ago, rumors started spreading online that Citi was preparing to quietly shut down applications for the Citi Custom Cash card. At first, most people ignored it. Credit card rumors happen all the time. But then, something strange happened. People suddenly noticed the application page disappearing. Links stopped working. And eventually, the card was officially marked unavailable to new applicants. Just like that, one of the most loved cashback cards in the entire credit card industry was essentially gone. And now the bigger question is not whether the card disappeared, but what happens next to the people who already have it. Because if you know anything about banks, you know they rarely remove a product without planning something bigger behind the scenes. Some people believe this is only the beginning and that Citi could eventually slash rewards, remove mega benefits, or quietly convert cardholders into weaker products over time. Others think existing users will be protected, but nobody really knows yet. And honestly, this entire situation reveals something much bigger happening in the credit card world right now. Banks are starting to realize that smart customers have figured out how to beat the system. Over the last few years, people became incredibly good at maximizing cashback, stacking rewards, exploiting bonus categories, and earning thousands of dollars in points from everyday spending. What used to work quietly in small online communities suddenly became mainstream knowledge all over YouTube, Reddit, TikTok, and finance forums. And the Citi Custom Cash card became one of the biggest examples of that trend. This wasn't just another average cashback card. It was simple, powerful, and almost too good to be true. Instead of forcing users to activate rotating categories every few months or memorize complicated reward systems, the card automatically gave 5% cashback in your top spending category every month. That means if you spent the most money on gas, you earned 5% on gas. If groceries were your biggest expense, you earned 5% there instead. Restaurants, supermarkets, transit, streaming services, it covered many of the categories people spend money on every single day. And because everything happened automatically, people loved it. No activation, no tracking calendars, no complicated rules. Just swipe the card and earn rewards. But then users discovered something even crazier. Some people found ways to get multiple versions of the card through product changes and account strategies. Suddenly, people weren't earning 5% in one category anymore. They were earning 5% on groceries, gas, dining, and more all at the same time using multiple cards. For hardcore points enthusiasts, this became one of the most powerful cashback setups available with no annual fee. And that may have become a massive problem for Citi. Because while banks love customers who carry balances and miss optimization opportunities, they don't always love customers who maximize every single reward perfectly. So, in today's video, we're breaking down exactly what happened to the Citi Custom Cash card, why this move could signal major changes coming to the cashback industry, and what existing cardholders should be paying attention to right now. But that's not all, because Chase also just launched some huge Southwest Airlines credit card bonuses that could unlock nearly free flights for couples and travelers. And later in the video, I'll also show you one of the easiest ways people are quietly earning tens of thousands of Chase points through a strategy most everyday users completely ignore. Trust me, you'll want to stick around for this because the credit card game is changing very fast right now. And the people who understand these changes early are usually the ones who benefit the most. The Citi Custom Cash card didn't just disappear randomly. What makes this story so important is that this card quietly became one of the most powerful cashback tools available to everyday people. Most credit cards make rewards complicated on purpose. They force users to activate rotating categories every few months, track spending caps, or remember confusing bonus structures that most people eventually forget about. But Citi did something different with the Custom Cash card. Instead of making customers work for rewards, the card automatically adjusted itself to your spending habits every single month. Whatever category you've spent the most money on would instantly become your 5% cashback category. That meant people could use the card naturally without changing their lifestyle. If you spent more on gas that month, you earned 5% on gas. If groceries became your biggest expense, the card automatically shifted to groceries. And because the categories included everyday spending like dining, transit, supermarkets, and gas stations, almost everyone could benefit from it. This simplicity made the card extremely popular online, especially among people who wanted easy rewards without constantly managing multiple systems. But the real reason this card exploded in popularity was because smart users realized there were ways to maximize it far beyond what Citi probably expected. The average customer might use one card casually, but experienced credit card users began creating advanced setups using multiple versions of the same card. And once those strategies became popular online, more and more people started copying them. Suddenly, what looked like a normal cashback card may have become one of the most expensive rewards products for Citi to maintain. And now many people believe that's exactly why applications suddenly disappeared almost overnight. One of the biggest reasons people are worried right now is because banks rarely remove products without eventually making deeper changes later. Closing applications is usually just the first step. In the credit card industry, companies often start by quietly limiting access to a product before slowly reducing rewards or restructuring the program completely. And that's why existing Citi Custom Cash users are paying very close attention to what happens next. Some experts believe Citi may eventually convert current cardholders into a different no-annual fee card with weaker rewards. Others think the company may simply reduce the value of the 5% categories over time. For example, Citi could lower the cashback percentage, reduce spending caps, or make the categories harder to qualify for. Another possibility is introducing activation requirements similar to cards from Chase and Discover. Right now, the custom cash card is simple because everything happens automatically. But if Citi forces users to manually activate categories every few months, many customers will forget. And when that happens, the bank saves money because those users only earn standard cashback instead of bonus rewards. This strategy already works extremely well for other banks because most people don't carefully monitor their credit card systems. There's also another interesting possibility. Citi could leave existing users alone completely and simply stop accepting new applicants forever. Over time, some users would close accounts naturally, while others might switch products. That would slowly shrink the number of active custom cash users without creating massive backlash online. But no matter which direction Citi chooses, this situation highlights something important happening across the entire financial industry. Banks are becoming more careful about extremely generous reward systems because modern consumers are smarter than ever before. Social media, YouTube, Reddit, and finance communities have made optimization strategies mainstream, and companies are starting to notice the impact. What made the Citi Custom Cash card especially dangerous for the bank was the rise of the multi-card strategy. At first glance, earning 5% cashback on one category each month doesn't sound impossible for a major bank to handle. But the problem started when experienced users realized they could duplicate the system. Through product changes and account conversions, some people managed to collect multiple custom cash cards at the same time. And this completely changed the math. Imagine having one card dedicated entirely to groceries, another used only for gas, and a third reserved for restaurants. Suddenly, users weren't earning bonus rewards occasionally anymore. They were maximizing multiple categories every single month with almost perfect efficiency. Some people even organized family spending across multiple cards to push cashback earnings even higher. This created setups capable of generating massive amounts of rewards from ordinary spending habits. And unlike Travi reward systems that often involve complicated redemption rules, cashback is simple and direct. That means every percentage point matters significantly for the bank. When thousands of users begin optimizing rewards aggressively, costs can rise very quickly behind the scenes. And because the card had no annual fee, Citi had fewer ways to recover those costs compared to premium cards with expensive membership fees. This situation shows an interesting shift happening in personal finance culture today. Years ago, advanced credit card strategies were mostly hidden in small online forums. But now, millions of people watch finance creators teaching optimization methods publicly. Techniques that once belonged to hardcore enthusiasts are becoming common knowledge. Banks designed many reward systems expecting average customer behavior, not communities of highly informed users calculating every possible advantage. And when enough people start maximizing those systems perfectly, companies often respond by tightening rewards. That's why many people believe the disappearance of the Citi Custom Cash card could signal the beginning of a much larger trend across the entire cashback industry. While Citi was dominating headlines, Chase quietly launched something that immediately caught the attention of travel enthusiasts. The company released massive new bonuses on its Southwest Airlines credit cards, and for certain travelers, this opportunity could be incredibly valuable. The biggest reason is something called the Southwest Companion Pass. If you've never heard of it before, the Companion Pass is considered one of the strongest airline perks available, because it allows another person to fly with you for almost free whenever you book a Southwest flight. You still pay small taxes and fees, but compared to normal airfare costs, the savings can become enormous over time. And the new sign-up bonuses from Chase bring users surprisingly close to qualifying for this benefit. Depending on which Southwest card someone applies for, they can earn tens of thousands of points after meeting relatively manageable spending requirements. Combined with additional spending or points earned from travel, many users could realistically unlock the Companion Pass within the same year. The timing is important too, because earning the pass now could potentially provide benefits extending well into the following year. For couples, families, or friends who travel frequently together, this creates the possibility of saving thousands of dollars on flights. Of course, there's an obvious limitation. The value depends heavily on whether you actually use Southwest Airlines regularly. Some people love Southwest for free checked bags and flexible ticket policies, while others prefer premium airlines with luxury experiences. But from a pure value perspective, the Companion Pass remains one of the most powerful travel perks in the credit card industry. And moments like this are exactly why travel enthusiasts monitor credit card bonuses so carefully. Sometimes a limited-time offer can dramatically increase the value of an entire rewards ecosystem almost overnight. Another strategy quietly gaining attention right now involves something most everyday credit card users completely ignore: referral bonuses. While many people focus only on sign-up bonuses, experienced points, enthusiasts often earn huge amounts of rewards simply by referring friends or family members to cards they already use. And recently Chase significantly increased referral rewards on some of its business credit cards, making this strategy even more interesting. In some cases, users can now earn 40,000 Chase points for a single approved referral. That's double what many cards previously offered. And because referral limits can stack throughout the year, some people are capable of generating hundreds of thousands of points without increasing their own spending at all. This is one of the biggest differences between casual users and advanced reward optimizers. Most people think earning points always requires spending more money, but many experienced users focus on systems that generate rewards through timing, bonuses, referrals, and strategic applications instead of extra purchases. Referral programs work because banks are willing to pay existing customers to bring in new clients. From the banker's perspective, acquiring long-term customers is extremely valuable. But for informed users, these programs can become incredibly profitable. Some travel enthusiasts even use referral bonuses to fund business-class flights, luxury hotels, and expensive vacations that would normally cost thousands of dollars. Of course, referral systems work best when used honestly with people who are genuinely interested in applying. But the important thing is understanding how much hidden value exists inside modern rewards ecosystems. Most consumers only see the surface-level benefits advertised publicly. Meanwhile, experienced users quietly combine sign-up offers, referrals, transfer partners, and redemption strategies to extract far more value than the average customer ever realizes is possible. The bigger story behind all of this is that the entire credit card industry appears to be entering a new phase. For years, banks competed aggressively by offering larger bonuses, better cashback systems, and increasingly generous travel rewards. Competition between companies created incredible opportunities for consumers who understood how to use the systems correctly. But now the environment may be changing. As financial education spreads online, more users are becoming highly efficient with rewards. People track categories carefully, transfer points strategically, and avoid costly mistakes that banks once relied on for profit. In response, companies are becoming more selective and cautious about the benefits they offer. We are already seeing signs of this shift across multiple banks. Some cards have reduced lounge access benefits, others have increased annual fees, added spending restrictions, or lowered redemption values. In many cases, companies are trying to balance attractive marketing with long-term profitability. And the Citi Custom Cash situation may become one of the clearest examples of what happens when a reward system becomes too efficient for consumers. This doesn't mean credit card rewards are disappearing completely. There are still incredible opportunities available for people who stay informed. But it does mean the game is becoming more competitive and more complicated. The easiest loopholes often disappear once too many people start using them successfully. That's why timing matters so much in the credit card world. Some offers, bonuses, and reward structures only remain valuable for a limited period before companies eventually adjust the system. And usually, the people who benefit the most are the ones paying attention early before changes happen publicly. Right now, we may be witnessing one of those transition periods where banks begin reshaping rewards programs for a new generation of highly informed consumers. At the end of the day, this entire situation revealed something fascinating about modern finance. Credit card companies created reward systems to encourage spending and customer loyalty. But over time, consumers learned how to optimize those systems far more effectively than many banks originally expected. What started as simple cashback promotions eventually evolved into entire online communities dedicated to maximizing points, stacking rewards, and unlocking luxury travel experiences for a fraction of the normal cost. The Citi Custom Cash card became one of the clearest examples of how powerful these strategies could become. And now its sudden disappearance has people wondering which rewards products might change next. Some users are worried this signals the beginning of major cashback cuts across the industry. Others believe banks will continue offering competitive rewards because they still need customers in an increasingly crowded financial market. The truth probably falls somewhere in the middle. Banks will likely continue offering attractive incentives, but they may become more careful about products that allow extreme optimization. For consumers, this means staying informed is becoming more important than ever before. Understanding sign-up bonuses, cashback categories, travel redemptions, and referral systems can genuinely save or earn thousands of dollars over time. Most people never learn these strategies, which is exactly why informed users continue gaining such a large advantage. And honestly, that's what makes the credit card world so interesting right now. The rules keep changing, banks keep adapting, and new opportunities constantly appear for people paying attention. So whether Citi eventually nerfs the custom cash card, protects existing users, or replaces it completely, one thing is certain: the rewards game is evolving fast, and the people who understand these shifts early will always have the best chance to benefit before everyone else catches on.